Hello and welcome everyone to today's session. My name is Mohammed Shanti and I will be your host. Today we will cover the US market open. I'm a financial market analyst at FX Beza and I will be covering today's session, what happened during the European session and what's going on during the US session today. Just before we start, it's important to know that all the information that we provide here at this channel is for educational purposes, and it's actually recommendable from you guys to do your own analysis, to do your own research before making any investment decision. Please use the information that you receive from this channel as your educational purpose, just for educational purposes. We do not give recommendation, and therefore, please use your own analysis before making any decisions. So starting with what happened today in the markets. So the euro dollar is holding in a positive territory near the 1.0450, as the greenback kind of struggled today during the European session. That's because of the modest slide in the US Treasury yields. This has actually affected the stocks market, affected the currency markets, and also affected the precious metal and the oil prices. So one of the things that everyone was focusing on is the inflation number that came last week, which came higher than expected. It came 8.6 compared to the 8.3 expected. So this has kind of priced in the fact that the Fed could push interest rates higher in the coming FOMC session tomorrow, FOMC meeting tomorrow. So therefore, expectations for a 75 basis point increase. And according to the CME group, the financial tool that they're using, there's a probability of 93% of rate hikes of 0.75 rate hike, basically. So also we had the PPI numbers, which came unchanged, which kind of helped the euro dollar pair to continue its own momentum. However, the main trend for the euro dollar is bearish. So that's because the US dollar is still the king in this market at the moment. Higher interest rates, higher inflations are all things that are supporting the US dollar against all currencies. Talking about the gold prices also. So one of the things that actually affecting the gold prices, since it's priced in dollar, so the US dollar is gaining momentum in general, and therefore we're expecting prices to continue its bearish setup. However, we saw after inflation number came, we saw gold prices tend to go as high as 1870 before bouncing back again to the levels of 1817. Now, during today's session, we saw the prices in the European session, we saw prices all the way went back to the 1830, and now during the US session, it's going back all the way to the 1815, suggesting there's a continuation to the new downtrend. So what happened is that the gold prices are standing within a narrow range. We're standing in a narrow range. Now they're creating a new trend to the downside. So the gold prices are affected by the dollar rise against a basket of currencies. As you know, the US Treasury yields, the 10-year maturity date has risen above the 3.2%. So there was an unexpected rise in the British employment numbers. This is one of the things that actually also affected the British pound in terms of the pound dollar pair. So the pound dollar pair is facing a bearish movement at the moment. Also, we are seeing oil prices are rising for the second consecutive session, increasing fears of tight market supplies. This is due to the fact there is the geopolitical tension between Russia and Ukraine is still on the horizon. So people are still pricing in that there will be supply shortages due to the embargo happening from the European nations. So they are setting rules that they will not use the Russian supplies or the Russian oil. And there were talks that there could be that the OPEC Plus could produce even more to cover the latest shortages from them. However, that's affecting the supply side. Basically, the supply side is going down, pushing oil prices higher. Now, this rising prices is a little bit limited due to the fact that China's latest lockdowns because of the coronavirus affecting the demand side. So the demand side is also affected, but not as much as the supply side. So increasing fears of tight market supplies. This is one of the reasons why we're seeing the Brent crude trading just above the 123. So let's go for the technical perspective here. So in order to see how the dollar is literally dominating the market, we need to look at technical setup for each of the pairs available. So let's go to the MT4 over here, starting with the euro dollar. Now, as you can see, the price of the euro dollar pair is standing at 1.0440. Now, this movement over here on the 1 hour chart, you can tell there was a small bullish side over here happening, a small retracement to the upside. This is during the European session. This is because of the yields ticking lower a little bit. Now, just at the start of the US market, we saw this modest tick to the downside where kind of went back again, because now what I'm trying to say is that the treasuries are gaining momentum again, and this has affected the euro dollar in general. So the small retracement that happened over here was returned again. So the euro dollar is basically losing at the moment, so because of the dollar strength. So from a technical perspective, you can see there is both the MACD and the RSI are pointing to the upside, while the MACD is also pointing to the outside. Nevertheless, it's below the zero line over here, which indicates that there is still bearish control. But still, the fact that there is a divergence between the indicators and the euro dollar, the prices, this could give us a mixed indication. So a lot of traders could be out of the trades at the moment. What do we do next? We wait for confirmation. What kind of confirmation we're waiting for? We need to look at the latest support and resistance. So from the top side, we have this 1.0483 as a main resistance for the bears to wait for. So bearers could actually, the sellers could wait for prices to go as high as the 1.0483 and take a trade from here and aim to the downside, with the purpose of defeating this main level, which is the 1.04, which is the psychological level. It's very important for the bearish traders to defeat this level in order to see a continuation to the downside. Failure to do so, we could see prices tend to trade within a range. Why is that? Now, the logic behind this is that the dollar is gaining momentum across the board. The euro in general, in terms of economic numbers from the European nations, it's not in a healthy position anymore. All the nations, all the major nations, if you look at the economic indicators, you're seeing their growth potential is going down. This is one of the reasons why gold in the first place went higher to 1870 and then it went back. Inflation going higher, economic activities are going down, the growth rates are going down. So there's some kind of fear, and also there's a lack of confidence in central banks and their latest monetary policy actions. Now they're pushing interest rate higher, but the inflation numbers are going up and up. There are some talks that there could be some stagflation in the coming quarter in the US. So this is one of the reasons why we could see the euro dollar range in the coming future if it was confirmed there is a stagflation. Now, what does it mean, a stagflation? A stagflation is that when you see inflation numbers going higher, interest rates are going higher. However, growth numbers are going down and down in a rapid pace. This is one of the things that the Federal Reserve doesn't want, because in order to tackle it, they need to do some privatizations and also price control, which is not popular in the United States. So what will they do? They need to focus more in a rapid pace to increase their interest rates in order to tackle inflation as fast as possible. This actually boosts the US dollar against the euro, because there is a divergence between how much the ECB, the European Central Bank, is pushing their interest rates compared to how much the Fed is pushing their interest rates. That's why you might see the US dollar remain in control. This is why it's more favorable to see the bearish side. Yet, if we saw some range trading, this level is very crucial for the bullish traders. So if the bullish, let's say if prices went above the 1.0480, we could see prices all the way to the 1.05 and 1.0550. But in order to see that, we need to see a clear fundamental event affecting that kind of movement. Now, I would expect the RSI and also the MACD to give us a crossover to the downside in the near future. So once that happens, that's a signal to entry. A lot of traders use that kind of signal to enter the market. Nonetheless, we have an important resistance, support level over here, which is the psychological level of one spot offer. Now let's go to the gold market. The gold market, as you can see, we saw a lot of movement just in today's session. Prices went all the way during the Asian session to 1808 and went back again during the European session to 1830. Now here, if you look at it in the 4-hour charts, you can tell there was a range happening. So from the top side, it's almost 1870, between 1875 and 1870. And from the downside, we can tell that there is this number, which is over here. So let's put some horizontal lines so you can see the range that I'm talking about. So just before the inflation numbers, we saw prices go down. And then once the event came, we saw prices tick higher really fast. However, the fact that the dollar is dominating the market, it pushed the prices all the way down because of bond yields. Bond yields are more safer compared to the precious metal. Precious metal doesn't pay you interest. Bond yields, the bonds pay you interest. So that's why a lot of traders go to bonds whenever there is a fear indication. However, gold is an excellent tool against hedging and inflation. But for the time being, traders are moving towards dollar more and more. So this is one of the reasons we saw, from a technical perspective, we saw the 1833 were tested again, and then buyers weren't able to push beyond that level. So expectation that the price could all continue to the downside. What's the next level? The next level could be the 1800 mark. So that's a psychological level. A lot of traders are waiting for it. So this is the area that the next level should be aimed for. At the feet of this level, it could clear the path to the 1770 mark, which will be represented by this below this area. So if you look at the 4-hour chart, you can tell this is the next level over here. So the 1770 area. So that's my first take profit level. That's my second take profit level. Where's my stop loss in terms if I were selling? Somewhere around here, someone above this high over here. So it could be 1844. That's how the bearish traders, professional traders think in terms of how they can take their trades. However, a lot of traders who are waiting for the phenomena for the event to come. So they could wait for more confirmations just before the event passes. What is the event? The interest rate decision. Now, expectations based on the CME tool, based on the market pricing, there could be a rapid increase in interest rate hikes. This is really supportive for the US dollar. That's why we are more biased to the downside towards the 1800. However, if it failed to breach that level before the event, we could see prices all the way back within this range. That's why the bullish traders are waiting for more confirmation. So either you make a trade from this area towards the 1800, or make another trade, or wait for the prices to bounce back again inside this range over here. So that's your decisions. That's your decision, traders. Let's go to the another market, which is the US oil. Now, another commodity market. As you can see, prices are doing higher highs and higher lows. Now, if you look at the trend line over here, you can tell there was almost a breach happening. Now, this is a wick. So, sorry, before that, let's take this number over here. So just before, let's take this number over here. So let me show you what I'm talking about. So this trend line over here confirms there is a higher highs and a higher lows, right? So before drawing this line, it originally was like this, especially if you put the line chart. If you put the line chart, you can tell exactly how the line should be. So before this happened during the Asian session, so we saw prices trying to defeat this trend line over here, and it did for a moment. If you look over here, there is a wick happening. This wick confirmed that the breach is a failure breakout. Now, a failure breakout, meaning there could be a continuation to the upside. That was a confirmation for bullish traders. When was it confirmed? With the MACD over here. There is a bullish crossover near this candle, and also the RSI never went to the overbought territory. That means the sell side never happened. That's why traders are are aiming for the levels of 122 first. The second is to trade above that. So we need to see a breach of this level to confirm the bullish setup. A failure to do so, we could see prices trading within the ranges of 121.50 and another one which is the 116. So we could see prices continue within a range, or it could continue to the upside as long as they defeat the resistance level of 121.40. From the downside, when will this uptrend finishes? We need first of all, the 116 to be defeated. A defeat of this level, prices could go all the way to the lows of 110. A defeat of the 110 is required to see a new bearish downtrend. Before that, a range could happen, and especially if the 121 got defeated, we could see a continuation. Other than that, I don't believe the prices will do a bearish downtrend, especially with the latest supply shortages from a fundamental point of view. Now, let's talk about the US markets. So the US markets, if you look at the Dow Jones in particular, you can see there is a bearish bias happening. Why is that? Historically, if you look at interest rates, whenever interest rates are being pushed by the Federal Reserve, you could see the stocks market going down. Why is that? The stocks market got hurt. Stock market traders usually they try to go to the bond market whenever the interest rates or the premium being paid from the bonds are higher and higher. It's much safer for them because they want to get 4 to 6% in an annual basis from the safe assets. That's why they move their money from the stocks towards the bonds. That's why whenever there is higher interest rates, that means people or traders move their money into deposits or even into the bonds or even to precious metal or even into the dollar. That's why it's more safer for them to go to these assets in particular, because especially in whenever the economic conditions are in turmoil, inflation numbers are going higher, employment numbers, even though in the US it's really good, but however, if you look around the globe, still these numbers are literally going down. If you look at the PMI numbers across the globe, you can tell there is a bearish downtrend happening in the PMI numbers. This is one of the reasons why the economic activity is going down, and that's why traders are getting out of the stock markets and going inside the bonds market and even the safe haven items. So this is actually affecting the US 30 roll, which is the Dow Jones industrial index, to the downside. Now, from a technical perspective, you can see there is a huge momentum to the downside below the negative territory, suggesting that the bears are in control, especially if prices are below moving averages, the two simple moving averages over here. Now, however, if you look at the RSI, it's currently telling you that there is an oversold territory in place. That means we could see as minor pullbacks happening. So we could see prices going up to the moving average. Let's see the levels. First of all, this is the level 31,250. That could be a minor pullback that bearish traders could take for their selling trade, or some traders would actually take a trade from this area over here, from area so a little bit from the 30,800 and aim to the levels of 30,500 level. Now, how can we confirm that there is a bearish control? If you look at the S&P 500, now look at the daily basis. If you look at the daily basis, the January highs were 4,700 or 4,800. Now, yesterday closure confirmed a 20% drop. Now, if you look at the definition of a bear market, anything above 10 to 15% drop within a 6-month period, that's an official bearish market. So now we're officially in a bearish market. It's more than 20% drop from the January highs. That means bearish traders are in control. What's happening? This is not a dip that everyone is waiting for to enter the market. This is a new trend going to the downside. Why? Now, what should we do? What should we in terms of trading? If I'm looking as in the 1-hour chart, I would definitely wait for a minor pullback similar to this one. All right. And we can see this is a level that a lot of traders waited for. So 3,800 for them to enter this market. All right. Now, entering this market from here in order to aim where? To the 3,700. That's their main level, the first main level. Now, a lot of traders, they have this phenomenon, which is always buy from a low price. Now, how can you tell this is a low price? We could see prices go down and down even further. That's why you need technical indicators to help you out. That's why you need to figure out whether this is in a trending market or in just an ranging market, or this could be just a small retracement happening, and that's it. So for the time being, as I mentioned, 20% down from the January highs, suggesting that we are in a bearish market. Meaning we need to find a bearish signals. A bearish signal similar to, if you look at the MACD, there's a crossover over here at this candle. That was a bearish candle meaning a bearish entry. It actually worked. Prices are still below moving average, suggesting bears are in control. RSI never reached the 50 area like in a very long time, suggesting that prices are in a bearish mood. That means whenever you see prices go into the oversold territory, and then it gets out, that's not your entry point as a dip, but rather as an exit point for you. So instead of entering the market using the RSI as your entry point, use it as an exit point from a previous MACD entry. So for instance, someone enters here, wait for the RSI to get you out. So if you entered here, you might get out exactly at this candle when the RSI gave you a signal to buy, for instance. So this area over here was the exit point for this candle. Similar story, we need another confirmation. Now, if we saw in the coming 4-hour chart or even in the 1-hour chart a continuation to the downside at the feet of the support level of 3,030, this area over here, that means we could see a crossover. That crossover could give you an indication for a continuation to the downside. Use this technical knowledge to help you use other indicators that you feel more comfortable with, test it out, and then see how it's going to work for you in the demo account. Once you see that again, you can apply it in the live system. All right. So thank you so much for your for staying with us. Please stay tuned for more videos about the US markets. We have everyday content, and thank you so much for your time, and enjoy your evening.